Hey everyone, my name is Matthew Hell. Thanks for watching. On this video here, I'm gonna show you guys the difference between traditional real estate investing, like with apartments, and notes. Okay, so on this pad of paper here, I'm gonna put we've got our traditional real estate, and that's gonna be represented as a house. Okay, and then we've got these notes here. That's gonna be looks like paper. Doesn't really. Anyway, so there's gonna be a note here, with some scribbly marks on there, some numbers. This is gonna be your house. Now, I know a lot of investors, more than 90% of real estate investors are into your real property, and there's nothing wrong with that. You have the benefit of depreciation. You have the benefit of tenants and cash flow and the ability to actually touch the property, type thing. There are some downsides in this as well. You have tenants that may be calling you in the middle of the night. Now, if you have a good property management company, they would deal with those. But for people starting off, you're going to be managing your own property. I'm assuming that, as far as mowing the lawn, doing any plumbing work, and dealing with tenants directly, type thing. You may have termite issues if you're down south. But overall, it's still a great investment. Okay, now where we are in the note investing. Now there's pros and cons to this as well. You just have to find your niche. Okay, we chose notes because again, it's passive income. We don't have to market to find the properties or to sell the properties, which we've done in the past. So that's why we chose the notes. If we want to purchase a note, we go to different hedge funds that we've acquired and built good relationships up with, and they send us what's called a tape. It's a spreadsheet of notes that we can pick and choose throughout the states to see which ones fit our investment strategy best. So we got the passive income. We don't get depreciation as do the physical property. So this is a long-term income, interest income, but we can't claim the depreciation on there. So it gets taxed, a little bit differently anyway. We don't have to deal with tenants. However, if we have to foreclose on a property, in that instance, we will have to deal with the homeowner. And what we'll do is we'll get in contact, and we'll either take a deed in lieu of foreclosure, meaning that they deed us the property before we foreclose on them. We can do a cash for keys, which means we give some moving away cash so that they can move their stuff, and they deed over the property and give us the keys to the property itself. And then we can either rent it out, we can lease option it to another party, or we can strictly sell it from a realtor standpoint in that state, which we'd probably mostly do, just so that we could get a lump sum of cash up front. And then we would do a 1031 exchange for another asset. We'll get to that in another video, the advantageous tax benefits of that. Some other pitfalls with these are there's a lot of benefits. What else is there? Trying to find a homeowner who digs their head in the sand because they are late on their payments. That is probably the biggest headache, because we have to try to find these guys, and typically they will leave the house, or they will put their head in the sand, type thing. But we always have the benefit of foreclosing on the property. If they don't pay, they don't stay, type thing. Okay. So all in all, both are real estate investments. You just have to choose based on your lifestyle which works for you. Now, just another thing, if you're looking for an active lifestyle where you don't have to have an office somewhere, you can do this business on the fly. You can do it in any state or on the beach, type thing, which I like to do, is have it easy to do that. Notes is going to be your sweet spot. But if you're settled down somewhere, some city in the States here, and you've got a family and stuff, and perhaps you want to stay in your local area, I would suggest doing this. but you can also do some notes on the side too. Same with this here. So check it out. I hope this helps you though, because it describes, you know, the two very differently and how they're like, you know. So if you found value in this video, go ahead and share it with your friends, like it, subscribe to the channel, and we'll see you on the next video. Thanks.